Ed, American shares surged again strongly on Friday. So how did that lead off for the ASX?
Tom, yeah, we were expecting the Aussie stocks to open slightly higher this morning after the US had a pretty strong end of the week on Friday, up 3%, but that hasn't happened. The ASX 200 is down about 0.4% in the first half hour of trade. It's been weighed down this morning by a couple of things. Number one, National Australia Bank has just announced 1 month out from its profit results that it's expecting to take a $1.1 billion hit to its earnings at this upcoming half-yearly profit. That's due to extra charges for computer software, insurance write-downs and customer remediation. The bank also expects COVID-19 to affect its profit as well, although it can't reveal the full extent of that until May when it does release its profit results. But NAB's share price is down about 1% at the moment, so that's weighed down the market. Also, overnight, the oil price fell to its lowest level since 2001. A barrel of oil is now under $18. So that's been bad for our oil companies. The energy sector as a whole is down about 2% this morning. But it's good for motorists. You can actually, if you shop around, you can now get a litre of unleaded fuel for under 90 cents. So looks like a bit of a softer start to the week, Tom, for Australian shares today.
Yeah, incredible. The petrol prices, as you say, though, so far, Ed, a bit of red behind you is telling the story. Meanwhile, the property market, so many different predictions about what might happen here. Almost 2,000 properties were scheduled for auction across Australia over the weekend, even amidst these restrictions and social isolation. So what are the results? How do they all go?
Yeah, Tom, if we have a quick look at this slide, the results show that out of that roughly 1,900 properties scheduled across the country for auction, 50% of them were withdrawn from sale before the auction was meant to take place. And of the ones that did go to auction, they returned a clearance rate of 39%, which is near historic lows. Just 1 week prior, the Easter weekend, there was an auctions clearance rate of 30%, which is the lowest it's ever been. So it's come off that bottom, but it is still a pretty low auction clearance rate. What we're finding is vendors are withdrawing their properties from sale and changing to private treaty as a way to sell their houses, or they're just holding back and not actually choosing to sell their property until later in the year when COVID-19 is hopefully all cleared up. The other side of it is buyers are hoping that property prices may fall. There's been predictions from several economists that property prices could fall 10% this year. So buyers are probably hesitant to get into the market right now if they're thinking they can get a better deal in another couple of months. So property market is in a bit of a tight situation at the moment, Tom.
Yeah, I guess a bit of a standoff. Eventually you'll get people having to sell, and if things are still, a downturn, that's when you'll see the reality of a drop in prices hit. But we will see. Ed, thank you.